All right, guys, in this video, I'm just going to cover a few additional taxes that are levied on high income earners. Number one is the Medicare surtax. Everybody pays for Medicare. It's part of the Social Security Medicare. It's part of wages. Everybody's taxed on it. Everybody's taxed at 2.9%. The employer pays half. The employee pays half. Well, once you get above a certain amount of income, whether it's calculated on modified adjusted gross income or net investment income tax, they run kind of two calculations and figure out the total amount that is subject to this surtax, but they add 0.9% on that income above those thresholds. Okay, and that's just paid purely by the employee. So the 2.9%, half is paid by employer, half is paid by employee. If you're subject to the Medicare surtax, then you are just paying an additional 0.9% on income above those thresholds. Okay, so it can go up from 2.9 to 3.8 essentially. Second one is net investment income tax. Now, this is a tax levied on certain types of income, again, once you pass certain thresholds. So depending on your total income, you may be subject to this net investment income tax because they're like, hey, you're above these exemption amounts and you have a lot of income and you have a lot of investment income, we're going to tax some of that. We're going to levy an additional tax. It's 3.8%, not to be confused with the 3.8 on the Medicare surtax. Okay, this is a separate 3.8%. Some of these that factor into whether you have to pay this are taxable interest, capital gains, non-qualified dividends, and rental or royalty income. So you add all of those pieces in. That's as you are growing your net worth and you're having higher income and you're having investment income, then you could hit a threshold where you're paying net investment income tax, okay, of 3.8%. So it's something to factor in and keep in mind. And then the third one is the Social Security provisional tax. Now, generally, Social Security benefits are tax-free. Fast forward, you're old, you're receiving Social Security. It's generally tax-free, but as you have other types of income, like maybe you're withdrawing from retirement accounts, maybe you have investment income, maybe you have rental income, whatever the case is, as your income grows, then you could hit a point where some of your Social Security benefits are taxable. They could tax a portion of those. And so you might hit a point where of total income, where all of a sudden you have like a big step up in how much tax you pay because you hit the threshold and now you're paying on your Social Security benefits, okay? Something to keep in mind, again, these are not extremely common unless you're a high income earner. So I'm not gonna spend a lot of time there, but just something to keep in mind and watch out for if your income grows past these certain thresholds. All right, these will be calculated. Obviously, if you work with a tax professional, they're calculated in and you can see them on your tax forms. There's all types of schedules to calculate all these different numbers. So if you want additional info, you can check it out on the IRS website. They go through it. There's a lot of other resources you can look into or just work with a tax professional. Okay, that wraps up this video. See you guys soon.
Plan ahead so taxes don't catch you by surprise.